One way of valuing a business is to use comparable data showing the prices that other similar businesses sold for. The principle is that businesses of a similar size in the same industry with similar characteristics will be worth a similar price. More importantly, they'll have a similar risk profile to an investor, so they'll have a similar payback period. In other words, they'll have a similar PE multiple. As we discussed in the last video, the PE multiple approach is the most important method for valuing small businesses. Once we know the right PE multiple to use, we can calculate the valuation. Comparable data can provide an indication of both the sale prices and PE multiples of similar businesses that have recently sold. The trick is finding this data. If we were to look at public companies, it would be easy. These companies have to disclose their financials, so we can easily compare their earnings, price, and other information. But comparing small businesses to public companies is pointless. Even within the same industry, a small business, say a sub $1 or $2 million business, is going to have very little in common with a $1 billion stock market listed Leviathan. We need comparable data on the sales of privately owned businesses. And this is where it gets more difficult, because private companies don't have to disclose as much data publicly. Large private companies report some of this information, and it's recorded in M&A databases, which can be accessed by their subscribers. But these subscriptions are very expensive and are mainly aimed at City and Wall Street analysts and big companies. So in reality, most of this data is inaccessible to small businesses. In the UK, there's one good source of free comparable sales data, the PERDA database, which reports the price to earnings ratios of completed deals. However, the PERDA dataset isn't broken down by industry. It only reports the average across the entire market. It literally only reports one number, the average PE ratio across the entire dataset. In their latest release, this number is 6.7. It's interesting, but not very specific to different industries, and it's focused on the UK and Europe, with one newsletter for each. But the bigger problem with all of these databases is that they're just not relevant. The average value of a company in the PERDA database, for example, is £21.4 million, currently about $28 million, with average pre-tax earnings of £3.6 million. The PE multiple of a £21 million company is going to be very different to the appropriate multiple of a £1 million company, so the data is useless. The private subscription databases contain a small percentage of information on small businesses, but most of the dataset is on large private companies, within the range of the tens of millions to hundreds of millions of dollars. As we discussed in our last video, size is the most important factor in determining the PE multiple of a business. So data on large companies is of next to no use when we want to value a small business. Ideally, what we need is a data source that captures the sale prices and full financials of every small business that has sold in every industry sector. Unfortunately, this data doesn't exist. But we do have two quite good sources of comparables on small businesses from the United States, both of which are free. Both of these sources are based on surveys of business brokers who voluntarily submit the data on recent small business sales. It's US focused, and the data has its flaws, as we'll discuss, but it does provide some very useful insights. Let's start with the BizBuySell data. BizBuySell.com is a listing site for small businesses for sale in the United States, the largest in fact. This company publishes quarterly and annual insight reports, which are comparable data on the sales of businesses voluntarily contributed by hundreds of business brokers across the country. The data is broken down by state and industry and covers asking prices, sale prices, revenues, earnings, and how long the businesses took to sell. It doesn't show individual transactions, but the median and average figures by industry are very interesting. So, what can we learn from this data? This is the BizBuySell.com website. Now, if we just go to the media releases page, you can see this is where they have all of their press releases, and each quarter they produce an insight report into the market, the latest of which is the second quarter 2017 report, which is the one we're going to look at today. Now, right at the top, the first thing they talk about is the number of closed transactions. And as we saw a minute ago, in the most recent quarter, that number was 2,534, which is, it's a big number. It shows us that this is a good sized data set for us to use. It's focused on small businesses, but that's about all we can tell from that number. They're trying to suggest trends here, and they've even mentioned methodology changes, but given that they don't actually disclose their methodology basically at all, it's very difficult to kind of interpret trends from this number. For example, we don't know how many brokers were in the survey this time. We don't know how many brokers were in the survey last time. We don't know if they're the same brokers or different ones. We don't know if the brokers are required to report all of their sales or just some of them. We don't know what systems are in place for checking the accuracy of any of that. And obviously, this data set doesn't include sales by any brokers who weren't on the list, and it doesn't include sales by owners or by anyone else who's not a business broker. So it's kind of difficult to interpret anything other than the raw number from this. But we know at least that this is it's a big number, and that the data is going to be interesting to us. Now, one of the most interesting things actually about the second quarter data in particular is that in the second quarter insight report, they go through the full year data right at the end for the previous year. So at the bottom here, there's full year data for 2016, firstly by geography and then by industry. Now, this is the most valuable part of this insight report actually, and we're going to come back to this and focus on it in a minute. But first of all, let's just go back to the top and scan through this insight report so that you can see what data it includes and what's available, basically. So after talking about the number of businesses, they go into the key financials of the sold small businesses. So across the entire data set, what is the median revenue and the median cash flow of these businesses? And the median revenue gradually is increasing over time, but we're looking roughly at businesses that are turning over about $500,000 US. So these are small businesses, which is great. The median cash flow is about $100,000 US. Now, just a quick point on the cash flow. This is not the net profit. We covered this in depth in video 1, obviously, but I'll just quickly revise. The cash flow is another term for the seller's discretionary earnings. Now, outside of the United States, that term might be otherwise called the adjusted net profit of the business, or the net benefit to owner of the business. And what it is the net profit with add-backs added back on, and then the salary for the one owner and the benefits that owner takes as well. So it would be the net profit before tax with depreciation, amortization, and interest charges added back on. Then usually there'll be some one-off adjustments as well, and then the salary and benefits for one owner also added back on, and that would give you the seller's discretionary earnings. And that's what they're talking about here. That's what they're calling the cash flow. So roughly $500,000 turnover, $100,000 cash flow as a median. That's what this data set represents. The next thing they do is bring the entire data set down to one multiple. So across the whole data set, what multiple of cash flow is the price? And that number comes down to about 2.3 in the latest data. They also look at it as a multiple of revenue. So what multiple of the revenue does the sale price represent? And across the whole data set, bringing it down to one number, that number is about 0.6. So this is interesting, but it's much more interesting when we see later on when it's broken down by industry sector. This, just looking at the entire data set of every business that's sold by brokers that are reporting in this survey in that particular time period, it's quite diverse. It's like the PERDA data set in the UK, where they just bring every sale down to an average and what is the average across all of these sales. So for this small business data set, that average is 2.3 times multiple of cash flow. Now, the next thing that they're looking at here is the sale price compared to the asking price. And they're showing that in the latest data, the sale price was on average about 92% of the asking price. It's kind of interesting. You do have to take this data with a bit of a pinch of salt, obviously, particularly bearing in mind that the people who are reporting the data have a vested interest in the outcome. Obviously, the business brokers who are reporting this have an interest in showing that they're doing a good job for their sellers by pricing the businesses accurately. And one way of showing that might be to suggest that the sale price was close to the asking price. The other thing, obviously, that's in the vested interest of BizBuySell and of the brokers themselves is to show that now is a great time to sell your business. And you'll see, actually, if you read the commentary, it's, in fact, go back and read the other commentaries of previous insight reports. It's almost entirely positive every single time. And the conclusion is that now is the best time to sell your business in history in every single insight report. Because what they're doing is they're taking their data and really looking for things that they can show a positive trend for, so that they can use it to suggest that now is a great time to put your business up for sale. So I would really recommend that the numbers themselves are interesting, but take the commentary with a fairly big pinch of salt in this report. Next thing they look at is the average days on the market since 2013, which is a strange way of reporting this. What they've done is they've taken every year since 2013 only, and they've broken down all of the sales that have occurred in each quarter and bunched them together. And what they're trying to show is that businesses that sold in Q1 took slightly longer to sell, about 10 or 15 days longer to sell, than businesses that sold in the other quarters. Obviously, the x-axis doesn't go to zero here, so it's kind of misleading appearance. I think the most important thing that you can tell from this is that on the whole, businesses were on the market for about 6 months, about roughly 180 days. Now they zoom in on the restaurant industry. Each insight report, they'll choose different things, as I said, and in this particular one, they've found that sales price as a percentage of asking price has been increasing over time, and so they're trying to infer from this that demand for restaurants is increasing, basically. So, take from that what you will. It's interesting to a degree, but, use your own judgment. Again, some more commentary there. Top 5 regions by median asking price. No surprises with major cities being the top 5 regions by asking price. Now, the appendices, the first one they look at is small business sales by sector, which would be really interesting if it was broken down into a little bit more detail. You can see, services, 39%. So it's interesting, but, it is what it is. Median days on the market, about 6 months. Again, you can see from that. Now, this is more interesting. Price as a multiple of cash flow. Now, we know that the PE multiple of a business will increase as the size of the business increases, but it's interesting to see the actual real-life data on that. What they've done here is they've taken a subsection of the data set. We know that the median across the whole data set was about $100,000. What they've done is they've taken businesses from $100,000 in cash flow up to $1.5 million in cash flow, so the larger businesses in this data set. And they've looked at the cash flow, at the sale price as a multiple of that cash flow. So businesses from $100,000 to $300,000 in cash flow were selling at about 2.4 times earnings. And that increases right up to the businesses with $1.3 to $1.5 million in cash flow. Remember, this is not turnover, this is cash flow. So these businesses might be turning over, say, $4, $5, $6, $7, $8 million. And the businesses at the top end of this range were selling for roughly 4.1 times a multiple of that cash flow. So it's just interesting to see the real life data and how that size impacts the sale price. Basically, it impacts the multiple. Then finally, they get into small business listings by geography for the quarter, and then for the year. We're not going to dwell on this because, as we discussed briefly in the last video, location isn't that great a comparable. It doesn't have that much of an impact on the earnings or the earnings multiple that you'd expect from another business. So it's much more interesting to look at very similar businesses in locations that are not similar than it is to look at very diverse businesses in a very similar location. So we're not going to dwell on the location data. But at the very bottom here, what we get to is the interesting stuff, the closed small business transaction metrics by sector for the full year of 2016. And what they've done is they've broken the entire year's sales down into a table and separated everything by industry and then by subsector. You can see all of them here. And what they're covering is the number of reported sales, median sales price, median asking price, the average of the sales to asking price, the median revenue across each sector, then the revenue multiple, the cash flow, and the cash flow multiple on average. So this can be really interesting if you're interested in a business in a particular sector. Actually, we've transferred this into an Excel spreadsheet just to make it easier to filter things and to sort them and so on. Actually, if anyone wants this spreadsheet, just email us at info@harnbeck.com and we'd be happy to email this to you. It just makes the data a bit easier to sort through. So you can see, just if you just pick a sector, they're all here. That one, okay, that one's already selected there. Florists. If you're interested in the florist market, you can see that last year there was 54 sales of florists in this particular data set. And you can compare them to the business that you're interested in. Maybe if you're selling a florist or looking at buying a florist, you can compare this data. So the median turnover of these businesses was $279,000. Median cash flow from those businesses was $62,000. And the sale price that they went for as a median was $100,000. I think that's been rounded. With a cash flow multiple of 1.91 and a revenue multiple of 0.45. So if you're looking at a business that's in the same industry, you can start to apply these numbers to just give you a bit of an indication of what price range, or what PE multiple range in particular, you could be looking at for this particular business. The data is not perfect. There was 54 sales. There wasn't, we're not looking at thousands of sales, but this is still a decent number, and it's the best we have, basically. You can see in different sectors, they've broken them down in different ways. Some of them are a little bit too broad. There's one, freight, moving and delivery. This will include everything from, small FedEx franchises of couriers to moving companies to freight forwarders and so on. But these businesses obviously are going to have much more in common with each other than they will with banking companies. So the PE multiples that they're showing here are going to be much more applicable into this particular market. So it is really interesting, and it as another data point that can inform the PE multiple that you're looking at for your business, it is really useful. So that is the 2016 data in the Insight report from BizBuySell. You can find all of these on the media releases page on their website. And any questions, feel free to email us at info@harnbeck.com. The International Business Brokers Association also provides quarterly data on US small business sales in the form of its quarterly Market Pulse reports. Compiled in conjunction with M&A Source and Pepperdine University in California, the data is provided by approximately 300 business brokers and M&A advisors across 38 US states. They don't provide industry-level breakdowns, and it's a smaller data set, but their analysis by business size is more detailed, and it's useful to compare and contrast this with the BizBuySell data. The IBBA reports also contain some interesting metrics not captured elsewhere, like deal structures, and the commentary is a bit more interesting too. So, let's have a look. This is the IBBA website, the International Business Brokers Association. We'll just go to the industry research page, which has all their Market Pulse reports. Each quarter you can see they produce this Market Pulse executive summary. The full report only goes to the people who have actually contributed to the dataset, but the executive summaries are published here for free, and they include all of the key findings. So the latest one is the Q2 2007 report, and that's the one we're going to look at today. So we'll just scroll down through the introduction to the main part of the report, and they start with the number of completed transactions, which for the most recent quarter was 266. So a smaller data set than the BizBuySell data. And the other thing is that not all of these are really small businesses. They break the businesses down into what they call Main Street and lower middle market. Now, this is not turnover, this is the value of the company. And they've broken it down, they've subdivided it further down into less than $500,000 in value, $500 to $1 million in value, $1 million to $2 million in value. And these companies are going to be the most interesting to us. And then what they call lower middle market into two categories of $2 to $5 million and $5 to $50 million in value. So now, while a lot of these companies are not going to be of interest to us, the data is still very useful because they break most of it down by each of these categories, so we can see what's relevant and what's not. And we can also see, because of the individual breakdown by size, it gives an extra flavor to the data, which we don't get from the BizBuySell data. Now, this is also a voluntarily reported data set based on a survey of business brokers. And although they report the number of business brokers who answer the survey each time, they don't really disclose very much else about the methodology, so we don't have any details about the accuracy or any of the other details about the methodology. So a lot of this has to be taken with a pinch of salt. The commentary isn't as consistently positive as the BizBuySell report. It's a lot more nuanced, and the commentary has a little bit more value in this case. But everything still has to be taken with a pinch of salt. And like the BizBuySell data, it's actually just the raw numbers that are most interesting. So we'll scan through the report just in order so you can see what's available. They report different things each time, and in this quarter, they've decided to highlight the number of indications of interest for each business. So in this data set, which are obviously their sold businesses, 72% of them received at least 2 offers. And they show the number that received 2 and 3 and 4, the proportion. So that's interesting in itself. Next thing they report on is the seller's market sentiment. And so what they're talking about here is the proportion of sellers that believe it's a seller's market, so to speak. And you can see it's broken down by size of company. And basically, the larger the business, the more likely the seller is to believe that it's a seller's market, which is no surprise. It's easier, the larger the business is, the more likely it is to find multiple willing buyers for the business. So the more likely the seller is to feel that the market is in his favor. The other key thing that they're talking about and the key reason that they wanted to publish this, it looks like, is the comparison of the same quarter last year to this year. And in each size of business category, you can see that the seller's market sentiment is actually declining a bit. So that's interesting. Like Biz Buy Sell, they also talk about final realized price versus asking price. And for the smaller businesses, it's right within the same range, kind of 90 to 92, 94%. Then increasing slightly up to 98, 99% for businesses of the $5 to $50 million value range. Now this is where it really gets interesting. Looking at the sale price multiples, what they've done here is they've broken it down into the 5 categories again. And the first 3 categories, they're looking at the multiple of SDE that the sale price represents. So this is the PE multiple based on SDE, seller's discretionary earnings. And then for the larger 2 categories of business, they're showing the PE multiple based on EBITDA. So it's difficult to compare the top 3 lines with the next 2 lines because they're different multiples, but we can still compare within the category and we can still see overall trends. They also publish each quarter for the last 2.5 years, but as we were talking about earlier, it's difficult to make real trend kind of inferences because we don't really understand the quality of the data or the methodology. But the data goes back quarter by quarter, so it's available if you want to make inferences. But really, just the most recent data is probably the most useful. We can see here that the smallest businesses in this data set traded for a 2 times multiple of the seller's discretionary earnings, right up to businesses that were between $1 and $2 million in deal value, sold for a 3.3 times multiple of the seller's discretionary earnings. It's not broken down by industry, but having this breakdown into subcategories by size is actually quite interesting. It's quite useful. Even more useful is the next way they describe it, in which they've given a range of the sale price multiple. So for the smallest category of businesses here, 58% of them sold for a multiple which was 1.75 to 2.5 times the seller's discretionary earnings. Interestingly, the $2 to $5 million category, they've reported both. So 50% of those businesses sold for a multiple of between 2.5 and 3 times the seller's discretionary earnings, or 4 to 4.5 times their EBITDA. So this is a much more useful and a much more nuanced way to look at the range of PE multiples that might be applicable to another business. The next one, they're looking at common multiple by deal size and whether it's with working capital or not. And again, no surprise, the smaller businesses were focused on SDE, and the larger one they used EBITDA. They tended to use EBITDA. Time to close. For the smaller businesses, this matches very closely with the data reported by Biz Buy Sell, roughly 6 months to close, increasing slightly as the business gets larger and more due diligence is required. There's no surprises there. They also report months from the letter of intent until close. So again, starting with 2 months, moving up gradually as the business increases in size. Portion of sale received as cash at close. Again, this isn't really reported anywhere else, so it's interesting. Obviously, most sellers want to receive as much cash as possible, as much of the proportion of the sale value as in cash as possible at close. And what they're showing here is that the larger the company is and the larger the deal value, the lower the percentage of the deal value was actually in cash. They break it down by seller financing, earnout, retained equity, and other. It can be a little misleading in that obviously what this is suggesting in terms of earnout is not that the average business was structured in terms of a 1% earnout, but just that a very small percentage of businesses at this smallest level contained earnout in the deal structure at all. The ones that did would have obviously had a significant proportion of the deal in terms of the earnout. There'd be no point just structuring a 1% earnout. But this indicates that as an average across the market, a very small percentage of companies that sold in the smallest value had earnout in the deal structure at all. Whereas companies that are larger, a larger percentage of them had some of the deal value as an earnout. Again, all of this has to be taken with a pinch of salt. It's the people who are reporting the data do have a vested interest in showing that they've done a great job. And so one of those things would be to show that they've achieved more cash at close for their clients. But still, the numbers are interesting. Top reasons that the sellers went to market. Again, not really any surprises here. Retirement, burnout, new opportunity, and so on. But the people who are reporting this, the business brokers, are going to understand a little bit more about the sellers than the buyers. So at least we know that we can have a little bit more faith in that qualitative data than qualitative data about the buyers. Speaking of which, the next thing they report here is the type of buyer that has purchased the business, and they've only looked at two of the broken down categories. So the first category is the smallest category, businesses from $0 to $500,000 deal value. The next one being the largest category, $5 million to $50 million in deal value. And the most striking thing here really is just that the number of first-time buyers in the smallest category is almost 60% versus only 13% for the largest category. And private equity, which makes up about 40% of the largest category, they've broken it down into two types, only represents 1% of the purchases of businesses businesses with deal value of less than $500,000. So there's not really any surprises there either, but it's interesting to see the numbers. Buyer location. This is something that they don't report in each one. They've just chosen to report it this time. And again, it's interesting. The smallest category of businesses, more than 60% of the buyers were actually located within 20 miles of the business. And the trend holds that for the smaller companies, the buyers tended to be located geographically closer to the company. Whereas for the biggest businesses, that relationship started to break down. And for the largest businesses, there didn't seem to really be much relationship between the geographical location of the buyer and seller. In fact, most of them were located more than 100 miles away from the business. So that's interesting too. Buyer motivation. This is one of the things that I think really needs to be taken with a very big pinch of salt. They've broken it down into the buyer's motivation for buying the business being that it's a better return on investment than something else, or that the buyer is maybe a company that's growing via acquisition or add-on, or that the new owner of the business is technically what they call buying a job, which means that they've left a corporate job and they're saying that this will be their new job. Now, although that term isn't particularly elegant, this doesn't necessarily mean that these people are buying a micro business where they'll be doing all the work themselves. As you can see, even the largest category has 13% of buyers that fit this description. What it means is they'll be working in the business, but as CEO. So in this sense, it qualifies as buying a job. But all of this has to be viewed with some caution. And finally here, they're reporting on the top industries by market sector, showing which businesses were the hottest, so to speak, from buyers at each value. Manufacturing figures highly, and one of the authors of the report highlights that, saying that people talk about manufacturing being dead, but in terms of M&A, it's actually quite sought after. So that's interesting from an economic perspective. And for this report, that's the end. That's as far as it goes. So if you have any questions at all, please don't hesitate to send us an email at info@harnbeck.com. What about other countries? Do these findings still apply? Well, we don't have a lot of data from other countries. We just have bits and pieces. There aren't any comprehensive sources, and no one is regularly reporting on small business M&A statistics in most countries. But we do have a few data points to compare. One example is a report on UK M&A transactions from 2015 by the consulting firm Menzies. They looked at the previous 10 years of publicly available M&A records and compared the PE multiples. There's no industry breakdown, it's just the PE multiples by deal size. Most of the acquisitions were large companies, but a percentage of them were under £2 million. Because most of this data will have come from public companies, most of the acquisitions will have been at the top of this bracket, closer to the £2 million mark than the zero mark, but again, the methodology is not disclosed. Based on the average exchange rate during this period, £2 million was the equivalent of $3.3 million. So if we compare this to the same range from the IBBA dataset on US businesses, the comparable range would be the $2 to $5 million range. In both cases, they're looking at a multiple of EBITDA, so we are comparing apples with apples. And you can see that the multiple is in the same region. This doesn't mean that all of the US data will be directly applicable to the UK or any other country. It just gives us an overall impression that we're dealing in the same ballpark. Without detailed data like the IBBA and BizBuySell surveys in other countries, we can't tell for sure what the breakdown by industry would look like in those countries. Obviously, it will vary by industry too. Some industries will have a lot of similarities to their equivalents in the US, whereas others will be quite different. But as a general principle, it isn't unreasonable to use the US data as a very rough guide at least. But we do have to bear some caveats in mind. As we mentioned, the data is US focused, and it's going to be most directly applicable to people in the US and even Canada, although it is still valuable in other countries. But one of the issues is that the seller's discretionary earnings metric is not widely used outside of North America, so people in other countries have to take these numbers and then estimate what they would mean in terms of the net profit. The most important methodological issue with the data is that the methodology is not actually disclosed, which makes it very difficult for us to use it to identify trends, since we don't know how the data reporting has changed over time. It's voluntarily submitted data from business brokers who have a vested interest in the outcome, and without any details of how the accuracy is being verified, we have to maintain a healthy degree of skepticism. It's likely that there'll be a degree of selection bias, with some inconvenient data possibly being left unreported, which would mean that the figures may be slightly optimistic. But if you bear all of this in mind, we can still gain a lot from the data. The most important findings relate to the earnings multiples. Firstly, they're all in a tight range. There are no 10 times multiples or 0.1 or 0.2 multiples of SDE. They all range from about 1.5 to 4 for small businesses. We can see different earnings multiples in different industries from the BizBuySell data, and both datasets provide some insight into the appropriate SDE for a business based on its size. In addition to this, the data also provides a lot of rich detail on industry-specific sale prices, revenues, and average cash flows or SDE. We have some data showing how long businesses are taking to sell, and some information on deal structures, and a range of qualitative data and commentary. But it's important to remember that these sources only provide a guide to the range of PE multiple that might be appropriate for a particular business. The exact multiple will be dependent on the quality of the business itself, which will be based on how stable it is and how reliably we can predict its future earnings. It will be based on its realistic growth prospects and on the company's management, in other words, whether it's independently managed or highly dependent on its owner. And the eventual sale price of the business itself will be different again. It will be determined in large part by the effectiveness of the sale process itself. In particular, the ability to find multiple buyers who are willing to bid on the business. And many of the deal terms come down to negotiation. So in summary, the available comparable data can be very useful, especially in the US where it comes from, but even for people in other countries. Since data of this quality on small businesses doesn't exist in most countries, this data is really the best we have. You have to remember the limitations of the data and the potential biases, and you must combine it with other sources to get a fuller picture. But once you've done this, you'll have a good guide to the range in which the PE multiple of the company that you're interested in will sit.